Hi, this is Maverick. Well, the Federal Reserve Board decided to hold off on raising short-term interest rates this week, for now anyway, and with two rate hikes possible later on this year based on the prevailing data. These rate hikes would certainly impact interest rates on student loans, automobile loans, and home mortgages. And the Federal Reserve decided to do that based on stock market turmoil, volatility, and also a slowing global economy, especially China. Corporate America hates uncertainty like this. So CEOs are sitting on their cash. They don't make any capital expenditures like investing in capital equipment, product development, or hiring people to grow their business. So corporate earnings will likely remain flat in 2016. Until such time as the federal government gets its fiscal policy in order for economic growth to add value and align itself with the Federal Reserve Board's monetary policy. They have to go hand in hand. The Federal Reserve Board can't keep doing all the heavy lifting and compensating for no pro-growth economic policy from the federal government. Any such changes are unlikely in this election year. And how about that repatriation of $2.1 trillion sitting overseas in the accounts of multinational companies? If we could bring that money back to the U.S., that would significantly boost our anemic gross domestic product right now, right around 2% in annual growth. We should be seeing about 3 to 4% in annual growth in the GDP. That would certainly create some much needed jobs here in the country. Blackrock is betting big on millennials recently. They just hired 4 20-somethings recently for management positions. Kudos to Blackrock. I love it. It's a real leadership move in the financial services industry. But of course, when you're the world's largest money management firm and you have $4.6 trillion of assets under management, you better get it right, especially with the ongoing robo-advisor trend. And this certainly gives BlackRock an advantage with this infusion of more social media literacy into their corporate culture and young talented people who think and act more at digital speed, shall we say. And the financial services industry, as we've covered before, is just one of the industries that's adjusting to this, what I will call the acceleration of disruption in their current business models. Millennials' unemployment rate still hovers somewhere between 7 and 8%, depending on the source you use for that data, which is higher, 40 to 50% higher than the national average of 4.9%. That's not good news for this country, folks. There is a historical correlation of the demographics in countries with respect to economic stagnation. Just take a look at aging societies like Germany, Italy, Japan. The way that countries have typically worked around this problem and as a solution is to import more younger labor. Immigration is one solution, but it does have its limits, just like what Germany is experiencing right now. Business Insider just reported this week the fierce battle and rivalry going on between Facebook and Snapchat for messaging application dominance of digital videos in the mobile ecosystem. Facebook this week just acquired the animated filtering and editing app Masquerade to catch up with Snapchat. Snapchat now has 8 billion daily video views. That's up 5 times over 2015. Now, Mark Zuckerberg of Facebook has tried to buy Snapchat twice, and CEO of Snapchat, Evan Spiegel, has said no thank you. Evan Spiegel's net worth right now, $2.1 billion. Mark Zuckerberg's net worth, $48.2 billion. Also in the news, Under Armour continues nipping at the heels of Nike by signing up young superstars like Jordan Spieth, Cam Newton, and others. Under Armour's corporate philosophy is one of, quote-unquote, humble and hungry. They sign up budding young stars and young talent before they become megastars. Also this week, Under Armour rolled out their first and limited edition of 3D printed sneakers selling at $300 each. And not to be undone or left in the dust there, Nike also announced self-lacing sneakers with sensors and buttons to adjust to your own personal fit. Is online retailing giant Amazon.com now a logistics company? Well, it sure looks that way. Amazon has been scaling up their delivery services, and in the next 5 years, they could be a serious threat to FedEx, UPS for delivery services. Thanks for watching. Have a great weekend, and may God bless.